Welcome back, everyone. And right now, we have got the CEO and founder of BeQuant, George Zarya. Welcome, mates. You know,
Thanks, whatever.
you've really brought the big guns out. I mean, I know you used to work at BeQuant. Looks like they're trying to get you back there, man.
He got rid of me once.
You can run, but you cannot hide.
No, it's a true story. George at BeQuant gave me my first role in crypto coming out of
amazing.
TradFi. So, yeah, perhaps if it wasn't for you, George, we wouldn't be here now.
So you are the first prime broker in the space?
I believe so. Yeah,
Well,
we started
the few of you now, though, right?
yeah, but I think we've laid the grounds for the business model of crypto prime broker. Obviously, it's different from the term taken from the traditional finance, where I used to work on the electronic trading and prime brokerage side for 15 years. And the model essentially has been invented. I mean, we were, there were no other firms like us. We couldn't copy anything. So we built it. We built it the way it is right now. And I believe that's been picked up by our market peers as well. And that's what is called prime brokerage. It's a model of providing access to the different liquidity pools, cross margining, portfolio margining, very important things, and a lot of other small bells and whistles that combined kind of represents your traditional investment bank with all the myriad of different services that there are. So there's a lot of complexity to the business, and it's a tough business as well, and it's an infrastructure. But you get a view of everything, right? So you're talking to every vendor in the space. You're talking to every type of client in the space, and you understand a lot of different things in the products and what's happening. Mm-hmm. So definitely an interesting journey. Been an interesting journey for me.
Because it's funny, we were talking earlier off screen. Like a lot of people, a lot of businesses kind of loosely claim to be a prime broker, right? Oh, we're a prime broker, and you go, okay, but they seem to do parts of it, right? But yeah, what is prime brokerage like to you, like ultimately?
Well, it's I think it's not a set in stone, right? Kind of a thing, right? If we take the TradFi terminology, right? So the prime services typically involve lending, right? So it's about extension of your balance sheet, providing capital leverage to clients who want to have capital efficiency, and that's the core value proposition of the prime broker. So I think everything else is secondary, but the portfolio margin and lending component, I'd say probably the first. So you can be an execution broker, you can be an OTC desk, you can be, I don't know, custodian, staking, providing different services, but the core of the service is lending.
Yeah, interesting. And you guys have the business evolved quite a bit, certainly since I was there.
Indeed.
What does the business look like now? What are you kind of moving?
Yeah, well, we evolved along with the market and market conditions, right? So we moving towards more allocating capital to trading firms. Again, we've built up a lot of connections in the space. We know a lot of traders. So for us, we also build the expertise in the risk management side of things. So for us, it made most sense to migrate from a DMA execution PB into taking more principal risk and allocating capital. And now we're sort of a hybrid, sell side and buy side. I don't know how that happens, but I mean, it is possible apparently. So we have an OTC desk, which is regulated in Europe.
You warehouse risk then? You warehouse risk?
Yes,
do you?
yes, exactly.
Oh, okay.
And we allocate capital to trading teams that are run out of Seychelles.
And is it a lot of the allocations? Is that like through SMAs and stuff like that, or are you sort of?
It's basically our infrastructure, our accounts, our capital. We bring in the traders. We
and you fund it.
We fund it. We manage it. We bring external capital as well. We have a cap intro function as well. So it's basically making sure the guys succeed, and we provide them all the things except the alpha, and they bring in basically their trading expertise, which we don't do in house.
Yeah. What are the kind of interesting strategies and stuff at the moment that are out there?
Well, again, traditionally we've always kind of lured around market neutral strategies. So anything delta market neutral. I think the kind of an evolution since the very beginning basis trade has kind of died down. Specifically, this.
That's everyone's favorite trade, that one, right?
Yeah, it was for many years, exactly.
Yeah.
And that's what drove a lot of people to, it's an easy, low-hanging fruit for many people who can do it, manually.
Yeah, getting your head around it. That doesn't require too much complex, right? It's just...
Yeah.
Well, I'm surprised at how persistent the basis is trading where it has, right? Like, that hasn't been arbed away.
And there's a reason for that. There's capital efficiency. Again, there's no prime brokers with large balance sheet that can provide that capital that you can utilize and capture those inefficiencies quickly.
Right.
Therefore, it persists. The inefficiencies will persist because the market has been built using retail model in mind, right? So that pre-funding component. If you look back at the TradFi again, you have a post-trade settlement, T+2, T+3. Again, that settlement cycle is shortening now, but the point being is it's not capital efficient to lock your capital before you do the trade because you don't know when you're going to be doing the trade. So your money is sitting there, right? And nobody has, massive balance sheets in the space yet. And that's why we still have those inefficiencies. But again,
there's that also, the fact that there isn't the capacity to just lever up to a ridiculous size to do it, does that actually make it a safer trade for the people who are doing it, do you think? Does it make it less likely for that trade to blow up? Because, recently in the macro sell-off that we had, everyone was banging on about the rates basis trade and some of these big hedge funds like being, in a very, very precarious position. And arguably that may have been why the Trump administration started backing off on their rhetoric, because all these hedge funds are about to blow up on their rates basis trades, right? That's a dangerous trade because it's got max leverage in silly size and people have levered up massively. Is there like almost the natural circuit breaker in there in Bitcoin that people can't lever up to that extent that makes that basis trade a bit safer?
Well, it's just pure directional leverage in Bitcoin is a dangerous game, right? we all know it, right? So the market is very persistent in its volatility, right? So
yeah, but I think the basis trade blowing up in Bitcoin, like the perps versus futures, if you do that in Bitcoin, is that a safer trade because it hasn't been arbed away?
It's a safer trade, but it yields, I don't know, low single digit, which is for most of the people doesn't make much sense, right? You can make 5% in treasuries nowadays, right? So well, just do that.
Yeah.
So it's So again, speaking of going back to your previous question on how the strategy has been evolving, the basis trade is more or less dead. So you have to go into more complex strategies, and the one that has specifically been doing well is statistical arbitrage, right? So it's basically
So how would you categorize?
It's a market neutral strategy. It's not focused on latency or a time arbitrage, so inefficiencies of the mispricings. It's more about the patterns on how different coins correlate to each other.
So it's like correlation arc.
Correlation arc, yes.
Okay,
but it's market.
Those correlations are going to hold over certain time frames, right?
Exactly.
But flows are creating breakdowns in those correlations that you expect to kind of snap back.
Yes. So that's where we're seeing much more consistent returns over the years. In fact, right, from different players, and typically that kind of strategy is much more capital efficient. So we're talking about the HFTs cannot deploy much money. The basis ARP is limited. Cross exchange ARP, it's limited and it's super capital inefficient at the same time. So what do we have left? I mean, even from my experience in the traditional finance, Stat ARP has had similar kind of patterns.
These are Delta One strategies. Like, what about in the vol space? Is there any sort of particular interesting things that you're seeing in the vol space?
Oh, there's definitely much more sophisticated traders coming to the space, right? So the options is considered to be more complex area, and we've seen the more traditional kind of TradFi guys with experience converting into crypto, trying to ride this inefficiency wave while it exists. And again, luckily Deribit's been supporting that segment quite well, and from the infrastructure, from instruments, from liquidity perspective, and we're seeing this definitely going to be more stuff. But the market is becoming more efficient as well. By the way, that's the the smile is becoming the smile, and so on. So this kind of things, saying that we're on the right path as an industry. Again, it's becoming more efficient. It's a good, but it's more difficult to make money doing market neutral stuff or simple market neutral stuff.
And what does the future hold then for BeQuant? Like, where are you pushing your business to?
Good question. I think we're evolving along with the market. I think the DeFi is presenting a lot of opportunities right now. That's where we've seen a lot of interest as well. So it's kind of returning. It's all cyclical, I guess. And our opportunities within DeFi as well.
I guess one sort of final question. Obviously, as the first prime broker in the space, probably quite a different regulatory environment back then. A lot more uncertainty back then. How are you feeling about where we're at now? Obviously, with everything that's happened in the US, this new administration. Yeah, how do you feel about that and how that's evolved and where we're at now?
Well, we started our business in UK, hoping that the regulation will come soon, and it did, and it wasn't good. So we moved to Malta. We got licensed in Malta, and again, the European regulation has been covering only parts of the parts of the market, which didn't really allow us to fully operate in Europe. So we had to move offshore, and offshore is becoming regulated now. So I think the flows of the business show that we still need that kind of a holistic regulatory framework, and perhaps US could provide something like that, because again we need more guidance across the space to give more protections to the investors, so more money, bigger tickets can come in without being afraid of fined or hacked or this or that. So I think it's a myriad of different risks we're talking about, right?
George, it's been a pleasure having you on.
Thanks for coming on. Thank you.
Hey guys, great to meet
Cheers,
you.
George.
And sorry, mate, you can't have him back.
But that's okay. I can live with that. I can live with that. I have AI now.
Yeah, we're all getting
ChatGPT.
replaced by that at some point.
Here you go.
All right, mate, take care.
All right,
Thanks for
cheers.
coming on.
George.